Welcome to Pioneers in Payments, where payments experts share their insights. Now, here's our host, Donna Blum.
Hello, everyone. Today, I have the pleasure of talking with Philip Andreae from Philip Andreae and Associates. Welcome, Philip.
Good afternoon, and I look forward to this chat, Donna. I'm excited to be able to share 40 years of history with your audience.
Well, we're excited to hear what you have to share. To get us started, Philip, would you mind sharing a little bit about yourself, your background in the payments industry, and the work that you do at Philip Andreae and Associates?
Okay, so Philip Andre and Associates, or PA&A, is a management consultancy I formed back in 1984, working Manhattan financial institutions, basically doing technology integration and trying to make the Wall Street Journal redundant. In 1991, I joined Europay International as the Director of Information Technology and began a journey down the retail consumer payments path, where before that, when I was in the trading industry, we were looking at the wholesale transactions. And I had to make this interesting transactions from 100 transactions at $1 million to 1 million transactions at $100, as we began to look at debit and credit cards and consumer payments and what's happening in the retail marketplace. In 1996, I left Europay. I'd finished developing the EMV specifications for credit and debit payment transactions. To make that simple for your audience, that's the standard that sits behind the chip card that you have now issued to all of your card holders. Because this is an American audience, I would like to remind you that once I compared you to Uganda and Mongolia. The United States was the last to embrace EMV and move to smart cards, where most of the world had gone. So it was always fun to make fun of my native home. Um, Today, I consult to Cubic and MBTA in the transit space. I've recently gotten involved in developing mobile applications for elections, and one of the companies I advise is currently or was supporting last Tuesday and this past Tuesday the primaries for both the Democratic and the Republican Party. So here I am today, having wandered through the payment space. I did fireside chats with the Federal Reserve on blockchain and cryptocurrencies. About the same time, the Bank of International Settlement was beginning to talk about these things called central bank CBDCs, or central bank digital
Digital currency.
currencies, as another way of saying cryptocurrency without using crypto as part of the word.
Very good. Thank you for that. The first question that I wanted to ask you is about the most notable trend that you're seeing today in the payments industry.
I think the most notable trend, if I look back and I use 2017 as a benchmark moment, the biggest thing that I've seen that I did not anticipate would happen as quickly as it has is the move to contactless. This ability to, this tap and go feeling, using what we call NFC, or near field communication, to create a dialogue between a card, a device, a mobile phone, and the reader, without the consumer having to push their card into that hole or swipe that card through that swipe reader. So contactless, and that's very much COVID related. And the what we had to go through in 20 and 21, where touching things scared us, it was nice to be able to tap things. So that's probably the biggest change in terms of magnitude. If I was to then look at other domains of change, the whole evolution of crypto. And we go back to the original white paper that Satoshi wrote on blockchain and Bitcoin, and consider the evolution and wonder about Elon Musk and what he did with Dogecoin, and creating value out of something that everybody thought had no value. So that I would call as the second domain. People want to talk about this whole idea of these prepaid mechanisms, or these I shouldn't say what you had given me terminology. I would call it layaway. I think they're now calling it what, Donna?
Buy now, pay later.
Yes, so when I first saw buy now, pay later, I'm kind of going, isn't this from the future back to the past? Because if you think about retailers in the old days when our mothers had retail, they had a Saks Fifth Avenue card and a Macy's card and a Bloomingdale's card and a Target card and a whatever, a Godiva card, or whoever the merchant wanted to be that wanted to create a sticky relationship would go find a bank who would manage their receivables, who would factor the receivables. And layaway was a common form of selling something today and allowing the consumer to pay over time. And now we see the banks wandering into this space and basically reworking the product so that they can put their sales and marketing spin on an old business. I mean, because what is credit card payments? It's factoring the receivables of a merchant. So what's the novelty? It's really, Mr. Merchant, I'll help you make money now, and I'll worry about getting the money from the consumer tomorrow.
Mhm.
So,
Yeah, it's definitely hearing a lot about it and seeing it pop up in more retailers today.
and then you
It's
sit there and go, what is it? And you go, oh, it's one of those. Great. The retailer has a great way of selling product today based on some type of terms that the consumer is going to agree to, and some party who is going to buy the receivables from the merchant and
right,
then manage the collection of funds from the consumer over a prescribed period of time.
right.
Let's rebrand it and put it back in the marketplace. So,
Yeah.
is that
Just
new?
a new twist on an old
On
an
an old
old
time.
marketing strategy. So so let me ask you about what you see today as the top opportunity for organizations that process payments.
If you are the processor, you need to start thinking about how do you optimize payments. And again, now I have to think about the issuing processor and the acquiring processor and the merchant processor. And those are three different business units or business operations or companies that are going to latch on to serving a particular constituency. And we're beginning to see a new group of companies who are coming in there to latch on that consumer relationship. And if you think about what's been happening in Europe and how they've been opening up the payment channels and requiring everybody to have APIs, we now create a fourth group of processors who are going to aggregate the interfaces into those financial products for the consumer, as opposed to the acquiring processor or the merchant processor who is aggregating those payment products for the merchant. And then when you think about the issuing and the acquiring processor, they're aggregating the work on behalf of the issuing bank who has the cardholder relationship and the acquiring bank who has the merchant relationship. So for those people, you've got to figure out how to make it cheaper, because I think the pressure is going to be on the economics of payment out over time. And again, I'll look to Europe, which I spent 15 years over there. And if you think about interchange, it's 0.2% for debit and 0.3% for credit as regulated. And then you think about the Durbin Amendment, where
Mhm.
we regulated debit interchange for the large debit issuers. And we've tried to do something with credit, but then Durbin asked the interesting question, why is a check free and a debit card more expensive? The check is paper, it has operational considerations. The electronic payment is all electronic, there's no humans in there. So why is it more expensive?
Hmm. That is a really interesting question, and not one that I've thought about before. So thank you for bringing that up. Yeah, you would almost think that digital requiring less hands-on would be less expensive.
And if you think about what drove Senator Durbin to write that amendment, part of his argumentation in the original, you know, committee hearings was, why is it more expensive? And if you go back to the Judge Green decrees back when we started to have to put debit on our debit cards so that we could distinguish between a credit card and a debit card, it's always been about the economics and the cost of payment
hmm hmm
and who pays for that.
So my next question for you is about the greatest challenge, but I'd really like to hear how you think the Durbin Amendment specifically may be creating some challenges for organizations. Do you think that they're able to adapt to the Durbin Amendment and the requirements easily, or is this going to be a challenge for them?
I think the challenge goes beyond the Durbin Amendment. So let's start with the Durbin Amendment and expand outward.
Okay.
So, as a technologist who had been involved in the development of smart cards on a global scale, the Durbin Amendment created this enormous mess around how do you identify that that's signature debit versus PIN debit. Okay, which when you start looking at the Durbin Amendment, what were they trying to do? They were trying to say signature debit, Visa, MasterCard, that's one kind of transactions with one kind of set of actors,
Mm-hmm.
one set of profiteers. And then there's this other thing called PIN debit, which is more like a check, more like an ATM where I'm withdrawing funds. Why is that so expensive? Why are those rails that are really different costing the same amount?
Mm-hmm.
So Durbin went and threw into this mix. You can't have two affiliated operators. So that changes how you have to think about how you affiliate as an issuing bank with the different networks, which is a problem for you issuers and you financial institutions. And if you're a merchant, you have to figure out, am I going to spend the money to optimize the economics as offered by the multiple debit payment schemes? And they're all looking to do deals. But every deal, like magic, costs money.
Mm-hmm.
My wife and I have been once again watching Once Upon a Time, and they keep reminding us that magic comes at a cost. The cost of payments is now a cost of doing business. And when we think back to when we had cash, if I was a consumer, I was a merchant, I had my cash, I gave you cash, you gave me what I wanted, and there was no real cost to you. And yes, as you got to be a bigger merchant, there was a cost to count money. There was a cost to make sure that your clerks didn't steal the money. There was a cost to transport the money. And then you start offsetting that against the cost of these electronic forms. So there's a complexity that the merchant now has to deal with. More forms of payment, more cost.
Yes.
And so I think the biggest challenge that merchants have is, how do they continue to economically accommodate all of these new forms of payment that people are trying to invent because they think they know how to create a new widget. And
Right.
somebody's going to say, I should be able to pay with a Dogecoin. And the merchant's going to say, well, if it's only you, but if 10 people come to the same merchant and say, I want to pay with a Dogecoin, what is the merchant going to say?
Yep.
And when you and I began this conversation, as we were setting up to share with your audience, to share with the rest of you what's going on here, what Donna was talking about is that there's so much change. So let's talk about change. There's Zelle. There's Dwala. There's PayPal if we want to go back a little bit in time. There's all of these cryptocurrencies. There's these new ways of setting up prepaid cards. We're now talking about electric benefit programs where we're replacing the Social Security check with a prepaid card. Or we're replacing the WIC money with a prepaid card or with a prepaid relationship. And how to accommodate all forms as merchant? How do we take advantage of all these forms as issuer? And how do we embrace all of these forms as consumer? And how do we make it a good thing for everybody?
Right. Efficient and effective, cost effective, um,
And profitable.
and profitable. Yeah.
Which is always will become the conflict between cost and revenue.
Well, that's kind of a good segue into my last question, which is, so if we're trying to help these payment professionals navigate the changing payment landscape, what silver bullet piece of advice do you have?
Focus on efficiency. Focus on the fact that as we go digital, you open yourself up to a much larger landscape of criminals who will attack you. And focus on the consumer experience. And I think those three things, the consumer, the criminal, and the efficiency of your product.
Very good. That really does boil it down. I appreciate that. And I'm sure our viewing audience will appreciate it as well. Well, Andreae, or Philip rather, I'm sorry about that. Wanted to make sure that our audience knows how to learn more about Philip, Andreae, and Associates. So would you mind sharing with them how they can get a hold of you or learn more about your consulting services?
Absolutely. It's very easy. My last name is the hard part. It's spelled Andreae, or Alpha November Dog Romeo Echo Alpha Echo. If you put a period after that and a .com, you will find my website. If you want to email me, my first name is Philip. It only has one L. My last name .com is my domain.
All right, very good. Well, thank you so much for your time today and your words of wisdom. And I just want to thank everybody for watching. Have a wonderful day.
Thank you, Donna. Been
Thank
a
you.
pleasure.